Hello, a very good morning, ladies and gentlemen, and thank you so much for tuning into Smart 24 TV. We drive your business. My name is Anthony, and this is Financial Markets. And today we have a very important discussion in the room, and quite a very fascinating guest. So you don't want to miss out on any of the pieces of this show. But to be part of the show, remember to follow us on Twitter. That's at Smart24TV now. You can also follow me personally at Anthony Sebale and give us feedback through our socials. You can also watch us live on YouTube at Smart24TV or GOTV and DSTV channels 302 and channel 372 respectively. Well, the show is also probably, if you don't know, proudly sponsored by the Altex East Africa Trading. And with Altex East Africa, you can buy and sell fixed income securities across East Africa by simply dialing *292# and following through the prompts. Altex is saying you can do something new by engaging in trade wherever you are, whatsoever you are doing. Simply grab your phone and dial *292# to begin your journey of investment. Now, when we talk about financial markets, we sometimes get to confuse what we call trading in the financial markets with gambling. And the question is always, where is the line? Because everything within the financial market sometimes seems like a gamble or something to peek out, and then you probably expect a gain. You expect something good to happen after you have invested, after you have made a move to trade in Forex, in crypto, and so on. But is this the case? To discuss this and more, I'm joined with, on this discussion, Mr. Kanabi Frank, who is from Mitro Plus as a financial market analyst. A very enthusiastic young man here to break down for us some of the mysteries that confuse gambling and trading. You're most welcome, Mr. Kanabi, to the show.
Okay, thanks. My name is Kanabi Frank, the way he has uttered out. So Kanabi Frank is a crypto analyst. Kanabi Frank is a businessman as well. Kanabi Frank is a person who came to love trading out of the will of my own boss, the CEO that is well known here in Uganda, the one Sam Festo. I think when I utter out that name in the trading industry, you can all relate to that guy. You know, the guy who drives the most latest cars in Kampala here, Sam Festo. You know, the I-8 guy, if I'm to say that. So this is the guy that I met when I was just out of school. Looking at his lifestyle, the way he lived, I started to pick interest in what this guy was living like, and actually I tried to start learning, and he was a good guy to me, that he happened to allow me learn this freely. He taught me how to do this, and after being taught by him, I came out as an expert. And right now, when I analyze the market, I do not think that there is any other trader here in Uganda who can do that. Okay, I'm sorry for me to say,
that's quite
but that's it.
Fascinating. Like I said, you are very enthusiastic about this.
Yeah.
But where does your interest start? When did you start really getting interested? Because in Uganda, we have a mentality of you go to school, get your job, and probably get to go to further education. But few people get interested in this because, first of all, it's not taught in schools.
I understand.
That is one. So how did you pick interest in learning more about analysis?
Okay, before I say that I picked this to learn analysis, I'll first tell you this. First of all, I was already in business, in a family business. But I came to learn that here in Uganda, if you're selling something, you have to convince a lot for someone to do what? To buy. And I'm that type of a person who doesn't want to convince someone a lot. So when I came to see trading whereby it's only your skills that limit the amount of money you make, that drove me to something like, let me further do trading, because there I won't beg, I won't be advertising. Here I can just come in with my own money, invest the amount, then I go. Within a few hours, I've already gained profits. So I came to understand this as a business, not as a gamble. Now, the problem with Ugandan is they come to trading just for the purpose of making quick money, not learning. But this is a profession The way a doctor goes to university 5 years, the same way a trader has to go through lessons and classes, years, and then they get qualified, as I do right now.
Wow, interesting.
Yeah.
Let's pick up from what constitutes these two, trading and gambling. Financial markets are quite multifaceted.
Okay.
We have cryptocurrency, we have forex trading, we have fixed income, stocks, and some of these things work together. In other words, a movement in the stocks could influence a movement in crypto, or vice versa, right?
True.
So how do you relate with all this? I know from your personal experience, you have been exposed to different situations.
I understand.
But how do you define, where do you draw the line in terms of trading and gambling? Because also, why people think it's gambling, I'll be very honest. People think, for example, I buy a stock today, Apple stock, let's say, and I'm hoping the stock will go up, and I'll sell. That, to me, or to some people, might look like gambling. But in your own personal experience, where do you draw the line between what people call gambling and actual trading?
Okay, now, what makes trading gambling is that anyone comes in after learning that when it does this, it's going up, or when it does this, it's going down, then that's what they are going to follow. But this is the strategy. For trading, someone must be able to look at these charts, understand that around this line where exactly it's drawn, it's around the neutral point, call it the point of equilibrium at the charts. You have to be able to tell that the moment the market reaches here, the force by which it came, it is going to be propelled back into the same force to the upside. But now, for other traders, all they know, it's going down, then they do sell.
They sell, yes.
Now, the moment you do that, you're gambling. But for us who are traders, we normally wait and buy in when the market comes to us. You see, for me now, right now, I have a position which is running currently on BTC.
This is what we can tell our
now. This is Bitcoin chart.
Okay.
Right now, for those who think that trading is gambling, that's not the case. Remember, for gambling, you go there by luck. By luck, you're buying something and then you pray to God it goes your way. But for trading, I can come into markets, I do buy in, but 100% sure that it's going to go there because it has some analytical backups. It has some scientific backups, which allows this to work out the way I need it. For example, let me give an example still on this BTC chart. Right now, BTC gave us a move to the upside when it was trading around here. But there is a reason as to why this happened, and there is a reason as to why many traders decided to buy in here. Professional ones, not gamblers. They decided to buy in here simply because they saw that we do have an imbalance of candlestick here, which represents buying liquidity and buying money. And when price came to mitigate this imbalance around here, the huge candlestick, then price had to start a move to the upside. So there are things that we look at before we do take a decision in trading. We do not pray to God that they let it go my way. So this is out of profession, out of experience. Right now you're seeing that I have a tool drawn in. It's called a pitchfork. It's delayed from the third law of motion. This law states that
action and reaction
are equal. Yeah. Okay, this is how it works. If market is coming to the downside and then kisses the meridian line of the pitchfork, it is likely to be propelled to the upside to move into a similar direction. So when I try to measure the distance moved from here to here, it is almost the same as the distance moved from here to the upside.
Wow. Let's first of all start with, when you're buying cryptocurrency, for example, you have a speculation. Let's say Bitcoin, a couple of, I think last year, it fell to a record from at least 20,000 to at least 16,000 US dollars per coin. I think that was during 2022, towards the end of the year.
Yeah, which was the COVID crash.
Yes, the COVID crash. And people were saying, okay, here we go. Crypto has crashed. And there was a lot of hullabaloo in the markets.
I understand.
And at that point in time, people like you were very strong and said, no, let's keep buying. Let's keep buying. And yes, definitely after a few months, we saw Bitcoin again hitting the 30,000 mark from 60. That's almost double, right? In a space of, I think, 6 months.
Yeah.
how do you see this thing? Where do you get the energy to invest in a market that is literally crashing?
Yeah.
What principles do you rely on?
Okay. Now, before I tell you the principles that I rely on to buy into the markets that are crashing, I'm going to first tell you the principles that I rely on to know that the market is going to crash.
Okay.
Because if I can explain that this market is going to crash, then I can know that this market is going to go bullish.
Yes.
Now, this is the principle. The crash that you're talking about is this crash from 60,000 almost to 70,000 around here, and then all the way to the downside.
That was in October 2022.
Yeah, and if you come to know, we traders, we have something that we do call the RSI, the Relative Strength Index. It's this tool that you're seeing down here. Now, what the RSI does, it is that when the RSI it is overbought right here, well, then we expect a reversal in the markets.
What is the RSI?
The RSI is the Relative Strength Index. It is used to compare and know the strength within the markets. You understand? So now, if the RSI is overbought, a reversal is likely to happen. And if it is oversold, still a reversal bullish wise is likely to play out. But for us, we do not consider the overbought, oversold situation alone. We add in the divergence concept of trading. For example, let me show you something right here. Let me get a certain tool here. Let me get a vertical tool that I'm going to add on this chart. Look at the points that I'm going to label with a blue line. Have you seen that?
Okay.
I'll also add another point right there, and I'll try to extend my chart so that it becomes more visible. Now, with these two added, you can see that the chart was actually giving us a high. Call it, the chart was still going up. You can see that increase, but check what the RSI was doing down here.
It was going down.
The RSI was going down, yet the price is going
up.
Is going up. So the RSI was already signaling that the steam is running out of the markets. Markets are no longer strong enough to hold the price up. So if I saw the RSI moving down like this, that was the time to sell out. Because for me, by the time Bitcoin actually gave us this high, for me I was already with a Bitcoin position which I bought in around here.
That is in 2020.
Yeah. So this means that if I invested only 30,000 US dollars down here, by the time it reached the top, I had almost doubled my money.
That's right. So you can comfortably sell.
I can comfortably sell. So this is not gambling. It comes with matrices to look at and to understand. So I can still show you this. The same scenario happened before Bitcoin actually went back to 30K. So this is the same reason as to why I bought into Bitcoin when it was crashing so hard. Let me show you. So now Bitcoin down here was the lowest we went after the COVID crash. This low right here. Let me try to mark out the low. That low.
Yeah, that is in around, okay, between October.
We can get actually the actual date. Let me give you the actual date.
Okay.
It was around December 1st
okay.
of 2022, November, around there. So now, here, I was still in the markets, seeing that Bitcoin is crashing.
What price was that?
So the price here was around 15,000.
Wow. Yeah, I think that was the record low.
That was the record low. So I was in the markets, looking at Bitcoin giving me lows. Check this. Bitcoin giving me these lows. And the RSI on the other side, the tool that I told you about. Now I'm using only one tool, but we integrate a lot of tools. But now the RSI alone can play out in the markets and you get money. So, and the RSI on the other hand was giving us highs, signifying that the relative strength index was actually, they are called lower highs, signifying that the relative strength index was actually coming back into the markets. Money was flowing into the markets. More people were buying.
Now
into the crypto industry.
the relative strength index is an aggregate tracker of all the currencies.
Exactly.
Perfect.
So now, with that done, we saw that Bitcoin started a move to the upside. And if I'm to measure how much would a trader have made if they invested only 10,000 USD. By the way, I'm sorry to talk about that money because that's where I'm used to trading. That's what I normally put in. So that's
10,000 US dollars.
Yeah, 10,000 US. That's an equivalent of around
38 millions. Wow.
So you can see that from those lows, Bitcoin went up something like 90% of my money. So if I invested in...
That was in a span of how many months?
Let me see. This is 1 month, December, January, February. Only 3 months.
Wow.
I'm doubling my money. So there is no any other business that can do this in Uganda. It's only crypto that can do this. And these that I'm giving here, by the way, are not financial advisors, but they're just for education purpose. We have to be clear about that.
Yeah.
So you can see that actually after that, Bitcoin gave us all our way this rally to the upside, 90% our money.
Wow.
That's the greatest business anyone can do after you learning how to do it.
Amazing.
Yeah.
Now, still looking at that, during that crash,
Okay.
is it always obvious to buy when things are bad? I've had investors like Warren Buffett always even make quotes like, when the streets are bloody, that's the time for warriors to go out there and fight.
That's it.
Is it always the case, or sometimes there must be care and caution taken as you're seeing the market crash? Okay,
now, if you are a professional trader, you will come to understand that there is something that we call DCA. It's dollar cost averaging. The more it crashes, the more I buy. This is what I'm trying to mean. Let me slightly go to the screen. So, let me slightly go to the screen. I pick some tools. Okay. This is what I'm trying to mean. I mean that if you see Bitcoin around here and then it goes to the downside, I buy more. When it gives me a new low, like up to here, I buy more. When it does this, gives me a move to the upside, I don't care. It goes to the downside, I buy more.
Wow.
So I'm dollar cost averaging in. I'm not entering at once. I have $10,000. But I do not want to enter at once. I can enter with only 1,000 whenever it gives a low.
Yeah.
So at the end of that day, if it starts to go back up, to whatever move it goes back up, I'll be already making money.
That's right.
That's what we call DCA. And that's what Warren Buffett and other big traders are doing on their daily basis. Actually, a trader who has money, they will not even need that analysis that much. As long as you can understand DCA, then you can do that.
Let's talk about, before we go into a break and come back, the fact that you've mentioned that you have to split your money. You don't go in with all the $10,000 and buy at once. First of all, this is $10,000. It's a lot of money. That is one.
Okay.
And probably many young people watching could say, I think I can't afford to buy that much. But what money would you advise someone to actually invest? I've seen people invest their salaries. I've seen some people invest loans, and they have been disappointed. But what kind of money would you advise someone to be able to put aside for investment in such trading? Okay, now what I always tell people is this: for investing in crypto and stocks, may it be forex, you should invest what you can afford to lose. That's a humble truth. Invest what you can afford to lose. Why am I saying that? You're investing, you do not have an experience like I do. So it means that you're slightly gambler. So if you're a gambler, what you have to do is to invest what you can afford to lose. That's what I can tell you. Another thing is that to me now, I invest like with $10,000. It can feel too huge to you, but for me, I know guys who invest $1 million in the markets on a daily basis. You understand? So it's always what you can afford to lose, and these guys are okay with losing the $1 million Dollars.
And they still can they live
More.
more. So that's life.
So this is a game where you don't invest your daily transport money that you're using for,
My friend,
for your daily.
you will walk. You walk from work to home, I'm telling you. So it's a business where you have to be, that you invest what you can afford to lose.
Thank you so much, Mr. Kanabi. We are going to take a very quick breather. When we return, Mr. Frank, I want us now to look at how different markets relate.
Yeah.
We've seen, for example, Apple stocks. When they are moving up, you see that the Bitcoin follows suit.
Okay.
Or vice versa.
Okay.
And you're seeing the Forex as well. Sometimes they follow a trend that can be picked from the stocks and the crypto. How do you relate all these different facets of the financial markets when you're making analysis?
Okay, now
we're going to after the break, Mr. Kanavi.
No worries.
Thank you so much, ladies and gentlemen. We are still talking to Mr. Kanavi from Microplus Labs, and we are discussing market analysis. Is trading gambling? My name is Anthony. We'll return shortly after this quick breather.
Smart 24, driving business.
Cooking oil like no other makes your meal so sweet and scrumptious. The taste of Uganda, yeah, the taste of Uganda, the taste of Uganda.
Waliwo abagamba nti okuyiiya emizannyo si muzannyo. Olina okwewaayo n'okukkiririza ennyo mu ky'oyiiya. Olina okubaayo n'omuntu akuyambako. Naye olowooza omuntu ng'ekyo kimuli mu musaayi ebyo bimulya. Anti aba yazaalibwa kukola ekyo. Tega Pearl Magic Prime ne Pearl Magic Loco. Sigala ng'oyungiddwako olabe engero zaffe ennyuvu nga bikoleddwa mu ngeri eyaffe ey'ekinnansi.
Say goodbye to paperwork and travel costs. Now every MTN customer can register to invest in securities anytime and anywhere with Zabu in a few simple steps. Step 1. Dial *292#. Step 2. Select option 1. Register with Zabu. Step 3. Enter your full names. Step 4. Enter your national identification number. Step 5. Enter your national identification card number. In 24 hours, you will receive an SMS confirming your registration. Congratulations, you are now ready to invest.
Smart 24, driving business.
Warm welcome back to the program, and thank you so much for tuning in and for watching Smart 24 TV. My name is Anthony once again, and you're watching Financial Markets. I'm with Mr. Frank from the Microplus Labs. We are discussing market analysis and whether trading is really gambling. The show is probably brought to you by Altex East Africa. And check out Altex by simply dialing *292# and following the prompts. You will be able to buy fixed income securities across East Africa in Kenya, Uganda, and Tanzania. Altex East Africa is saying you can do something new. Now, Mr. Frank, looking at what we've seen before, Bitcoin, for example, you can benchmark on the relative strength. Is it called the relative strength index?
The RSI.
The RSI.
Actually, I'm not benchmarking on that, but it is just an indicator.
It's one of the indicators.
Yeah, one of the indicators.
Now, when you look at other markets, yes, now we are looking at now, for example, Bitcoin, and this is a cryptocurrency coin.
Yeah.
But when you look at, for example, the stocks,
Yeah.
And you look at indices like the S&P 500,
Yeah.
then you look at the specific stocks like Apple,
Yeah.
Amazon,
Yeah.
their movements in
Yeah.
pricing sometimes do relate with other markets, like
Yeah.
the crypto markets.
Yeah.
How do you use these tools to benchmark, or how do you use these tools to determine or predict the movement of other markets, using, for example, the stock market?
Okay, right on my screen, I have a BTC chart. Now, let me add on the S&P 500 chart. So it's going to be a compare. Let them be on the same scale. So, see, within candlesticks, I have the Bitcoin chart.
Okay.
The red and green Bitcoin chart. Then the yellow line represents the chart of S&P 500. Let me try to lower the time frame so that we can see this clearly and accurate. A few minutes. Let me see.
For our dear viewers, all this data can be found on different platforms. For example, TradingView. There's nothing really out of this world that we are dealing with. This data is available, and it's up to you to take interest and be able to look out for such information if you want to be an ardent trader in future.
Okay, so within candlesticks, it's Bitcoin, and within the yellow candlestick is the one S&P 500. Now, you can simply see that whenever the S&P 500 dropped, Bitcoin has fallen. So in trading, we call this correlation. So we have two types of correlation. We have the positive correlation, and we have the negative correlation. Now, a positive correlation means that those commodities, call them assets, are likely to move into similar directions. And negative correlation, that means that when one goes down, the other one is likely to go up. Now, an example of a negative correlation, I can give a correlation over dollar and Bitcoin. Whenever the dollar goes up, Bitcoin is likely to go down.
Any specific reasons for that?
The reason is that Bitcoin is actually up. Is always traded against the dollar. So when you're trading against the dollar, the moment it gains strength, it means the corrective pair that is traded on is likely to lose strength. That's the only reason.
So, because Bitcoin is valued in dollars, I don't know if that's what you meant. We count one single coin.
What I want to mean is this. Look here, slightly. BTC USD. This means Bitcoin per dollar. So if the dollar goes up, then the peg is likely to cause BTC to go down.
Okay.
So the power in the dollar goes up,
and the Bitcoin goes down.
In BTC has to go down.
Absolutely.
Yeah.
That's very clear. Okay, now we have the S&P 500. By the S&P 500 is a benchmark index for the United States markets. It has the top 500 mainly American companies, including Amazon, Google, Meta platforms, and so many others. So how is the S&P 500, and why? Because I'm seeing now a positive correlation, if I'm not mistaken, between the S&P 500 and the Bitcoin.
Yeah.
Why so?
Why so? It's because all these S&P 500 and Bitcoin are just assets. So traders always consider that if markets are good, or if news is influencing the markets, let me say about the interest rates. If interest rates are favoring S&P 500, the same way they are going to affect Bitcoin. So it's always that when S&P 500 is moving in a certain direction, BTC is likely to follow, because the same traders who trade stocks are the same traders who are going to come and investing in BTC.
Wow, interesting. And where do you do the prediction from? Because like I said, in the first place, we had, for example, Bitcoin. One of them was leading, either Bitcoin or S&P 500, to kind of give you a picture of where the markets are heading.
Now, we always have what we do call a leader and a lagger.
Okay.
Sometimes BTC is going to be the first to fall. There BTC is becoming a leader. And S&P 500 is likely to become a lagger, but most especially, most of the times, S&P 500 is the leader and BTC is the lagger. So the moment you see S&P 500 dropping, it can be like a day back. Just anticipate that a crash is also going to happen on BTC. And you can simply see it. You can see that right here it was S&P 500 topping out first, then BTC falls. So always S&P 500 is the leader and BTC lags behind but falls.
Wow.
Yeah.
Interesting. Now, when someone is investing, where do they look? I'm looking at the lagger and the leader.
Yeah.
The S&P, these are stocks, right?
I understand.
And then the cryptocurrency is also a very whole different world. Where do you invest? How do you make the decision to say, okay, now I'm going into the stocks? Is there a way or to leverage certain markets in order to be able to invest in other markets? Or you stick to one thing? You say, okay, I'm a Bitcoin guy and I'm going to stick to Bitcoin. I'm just going to use the S&P 500 as just a benchmark.
Okay. Now, if you decide to stick on only Bitcoin, that's going to keep you behind slightly. For us, we do trade everything stock and BTC. Now, there is what we call news. News normally influences where you are likely to invest. For example, a few years back, actually a few months back, Elon Musk came out and said that Tesla is now accepting BTC 100%. Now, that's when I decided to get my money out of stocks and I rush into Bitcoin, because there is a news about Bitcoin that is good. And whenever good news comes, price is likely to move into my favor.
Ah, nice. So on top of just having the market, you need to know what's happening.
What's happening in
what is Elon Musk saying at the moment?
Yeah, you have to follow the rich guys. We always tell Ugandans that when you're doing these things, you're following the big money. Now, if Elon Musk is supporting BTC and is always tweeting about BTC, that's when I'm going to invest in BTC. If Elon Musk is talking about meme coins, like the way he always tweets about Dogecoin, that's when I'm going to go and I invest in Dogecoin. If stocks are having some great news, like if the interest rates, everything is flowing into favor of stocks, that way I'm going to go and invest in stocks. But still, if everything is favoring stocks and they are already up and Bitcoin is lagging down, that's when I would buy Bitcoin if the stocks are already up. Let me show you something. If BTC is already giving me a move to the upside and the stocks are slightly lagging down and I see BTC is running to the upside, then I'll come and buy the lagger in anticipation that the lag is going to fall the leader.
Wow.
That's how we do this.
That's amazing.
Yeah.
So you have to keep your eyes on all the markets.
On
you
all
don't
the markets, yeah.
put all your eggs in one basket.
That's it.
Now, let's talk about the metals, the commodities market. That market we don't have here in Uganda, but elsewhere in the world, you have gold, you have silver, really, also giving us a lot of gains when you look at what some of the big traders are looking for. Now, for example, gold right now hit a 4-week low. It decreased to a 4-week low of at least $1,929 US. How does the markets, the commodities market, really work? Because at least we understand crypto, those are currencies, then you understand the stocks, but then the commodities, are you buying gold in actual sense?
No, now you're just buying something that looks like an ETF contract of gold.
Okay.
Yeah, so you're buying that contract, but not buying gold itself. It's just an ETF contract to an exchange. Then you do buying, and you'll be owning gold, but it's going to be in sense of a digital gold.
It's a virtual gold. You're not actually going to possess it. Okay.
You're not going to possess it.
How does it work? How do the movements happen?
Now let me come to the chart right here. Now this is the gold chart. I'm trying to display it. I'm still waiting for the entire data to load.
Okay.
Let me take it to the bigger time frame. Let it be daily. Okay. I'll do XAU by Owanda because sometimes the exchange that is providing could provide the information that is okay. Right. So by Owanda. Yeah, now I have the right chart that I need. So for me to buy gold, remember I'm an analyst. When I'm trading Forex, I don't actually almost look into the news part of it that much. This is where professionalism now kicks in. Here I look at the kinetics of the chart. For example, you look at my chart, there is something that we do call Elliott waves. Everything in this world moves within waves. Even the COVID-19 you had at now, that is the first wave, this is the second wave. Now, if I see the COVID-19 chart right now, I can even tell that COVID-19 is likely to come back in this month. Just looking at the chart, I know where the waves are likely to spike again by just using the Elliott waves. Now, look at this. We had this first move of gold to the upside. Okay. We call it an impulse, we traders. And then we do have this kind of sideways move. We call it a correction. So, whenever a correction is done, we expect an impulse. How do I define that a correction is done? That's where I draw in my waves. So, a correction is always characterized by three waves, which is simply an A, B, and a C. So, if I get an ABC pattern, then that means that the correction is done and I'm going to get an impulse. So, after seeing this done, I come in here and I long gold or I buy into gold and I make money. Simply like that. So, still, I can see that after the correction reaching the upside, we are likely to get this retracement. Why am I anticipating a retracement? I go back to my RSI. You can see that as it was going to the upside right here, the RSI was already dipping, going to the downside. That's a divergence.
So this is an RSI as per the metals or commodities market? Yeah,
RSI works for everything. Yeah, you can see that this one was already dipping. So that was also a precursor that gold is likely to sell off. And this sell off that we are having on gold, I think it can still stretch more to the downside, because when I go into the deep chart of gold, let me remove everything and I show traders what is really happening with gold. Let me actually take it to the weekly time frame.
Okay.
So now at the weekly time frame, this is the gold chart. We can see that we already have 5 waves here. We have this one here as a wave 1. This was the wave 2. Then a wave 3. And this is a wave 4 here. And what we have accomplished right now is a wave 5. And remember, wave 5 is the last wave. So whenever the wave 5 is done, we are expecting a pullback, call it a retracement, into 3 waves. So we can get something like this here.
Okay.
So this signifies that gold still has got something to the downside. So the price of those who are investing in gold right now, they have to be so clever with what they are doing. Otherwise, gold is now in danger. So you can see that here I'm not gambling, but I'm using the tools and the professionalism to determine where everything is heading. You understand? So with that said, I can also add in another tool which uploads the harmonic patterns. Gold right now looks like it is going to give us a cipher pattern.
What is a cipher pattern? So
a cipher pattern, these are patterns which are drawn as a derivative of what we call the Fibonacci sequences. Fibonacci sequences are actually everywhere in nature. Even in your hairs, the way they coil, the middle of your hair is actually allocated at 0.6% Fibonacci, which is the golden ratio of the world. Even the flowers, the way they curve with their petals, Fibonacci. Even the snail, the way you see the shell coils, it's called a Fibonacci spiral. So God created Fibonacci in each and everything. So where people are involved, Fibonacci sequences are going to be there, because emotions themselves, they do have Fibonacci, and the trading markets is all about emotions. So if emotions are involved here, that one is going to be displayed onto the charts. So now, these harmonic patterns are always derivatives of the Fibonacci patterns. Now, if I do this, I'm drawing what we do call a cipher pattern, which has completed its wave C and expecting this D to be done around here. So expecting that.
That means we are expecting gold to go down by all means in the next few months and years.
So, and another thing that could actually signify gold going further to the downside, every beginner trader has noticed that there is something called the heads and shoulder pattern. Now, the heads and shoulder patterns is actually this one that is trading right here. It's a reversal pattern. It already signifies that a fall is coming into the markets if it happens in a bullish move. So, look at this. We have this as our first shoulder. This here is the head right here. Then this has been our last shoulder, and every time the last shoulder is done, we are expecting a move to the downside.
No. Now, the critics say that short-term investment is closer to gambling. In other words, people who invest for short spans of time are more likely to make losses than people who invest for a longer time. What would be your opinion on that?
Okay, the other one is called hold draw. Or if you're holding something for a long period of time, now you do not care what happens to the market. You are emotion free. But the more you spend time in the markets, the more you become more emotion. And the more you become more emotion, the more you're likely to make ugly decisions.
That's right.
It's always emotion that punishes the daily traders or the short-term traders, but it's not out of gamble. But they are emotions. So if a trader is from Micro Plus Labs, then they know how to deal with the emotions and how to deal with their psychology when trading these markets.
What's your distinction between short-term and long-term investment? Where do you think, which market do you think can bear with short-term? Because I understand still there are traders who come into the market for short-term gains, right? And I know even longer-term investors still have moments where they come in for a short time to make a profit and then pull out. What markets do you think, could you point out, and at what points in time can short-term investments be made?
That's forex markets.
Forex
if you want
markets.
to do short-term trading, go to forex markets because they are more volatile. You can easily go there and make up some money.
Give us one chart of forex, and before we wind up with the markets.
Let me actually give you a chart of DXY, which is the dollar index. More important.
Okay.
So this is the chart of DXY.
So this is the US dollar against what?
Now this is the US dollar average from all other currencies.
Against all other currencies. Is this because it's the strongest currency in the world that you can have this? Or any other currency could have this as well?
Okay, all currencies, they do have their indexes. An average. Like you see, Euro has something called XA, which is the Euro index. You can see GBP having also its own. But now this is a dollar rated against all other pairs. And since dollar is the strongest, that's why we do always use the DXY. So now the DXY chart is looking quite bullish. So for now, you can't say that the dollar is really bearish. The dollar is strong. That's why you see that even the Uganda currency right now is dipping, and also other currencies. Because when you do look down here, you can see that these candlesticks are pointing up, so the dollar is going up. Now, likely the dollar is to come back around here, fill out this imbalance. This is what we call inefficiency in price action. Whenever we do have inefficiency in price action, the markets do come back, fill up that inefficiency before they dip the more. So now they feel the inefficiency. Okay.
No.
I think
we've lost. Yeah, it's okay.
So
it's okay. We can go on.
Okay, they normally feel the inefficiency. After feeling the inefficiency in terms of a correction, then the market continue to the direction of the trend. So right now, if someone is trading the DXY, I don't expect you to be shorting it. You need to be waiting for what you call the pullbacks and then buying in.
Okay.
That's it.
So how do you predict? Because now you're saying the dollar DXY was the average, but now I'm buying, for example, with the Ugandan shillings. How do I see the difference? How do I tell, okay, now using my Ugandan shillings against the US dollar, this is how much I'm going to make, because it's always two currencies involved.
Okay. Now this is what I'm going to tell you. The forex markets we trade, we always have what we call leverage. Leverage is provided by the exchange. So the exchange enables a Ugandan who has only 10,000 Uganda shillings to trade with around 500 Uganda shillings. So they give you that loan. And that loan causes something what we call liquidation. The moment the market goes against you, they liquidate you. So with that, to say if someone is using a leverage, let me say a leverage of something like 50x, they can simply use the 1,000 Uganda shillings to make around 50,000 Uganda shillings per trade, is like that, because of the leverage effort within the market. So these markets, you're also using the exchange, the money from the exchanger itself. So with the markets, your money is not that a big limit as long as you're professional. But remember, the bigger the leverage they give you, the more risky the markets become.
Wow.
Yeah.
Emotions, as we wind up, how would you term discipline and emotions? Because you've talked about how the market sometimes, people, especially the short-term investors, invest based on emotions. They see the candles going down, like you call them, they sell. They see them going up, they keep buying, and they just keep following the trend. You know, how would you mention to someone the discipline and emotions? How can they balance the two when investing?
Now, let me talk about something that we do call the Wyckoff concept of trading. Now, Wyckoff concept of trading is that trading strategy which is used by banks and big institutions. If you do not know, banks and other big institutions are always in these markets doing what? Trading. The money you're giving for the banks, they always trade it and then they get off some good amounts. But without leverage, so they can't be liquidated so easily. Now, a bank comes into the markets knowing that these traders who are in the market right now, they are thinking that the market is going up. What the bank has to do is to trade against you. For them now, they are going to come to sell. For you, you're buying. So they are selling you what they own, and the market is likely to dip. Now, the only way you can control your emotions in the market against these big companies, the giants, is by you doing what you do call risk management. Understanding that I place in a trade knowing that even if I lose that money, that's not quite a big deal to look at. And another thing, you can also apply what we do call the stop losses. Understanding what we do call the stop losses, how to apply them, and whenever whenever trade goes into profits, you move your stop loss to break even. So you lock in some profits and you keep the trade running. So to control the emotions is actually a part of controlling your risk. That's how you can control that.
Wow, thank you so much, Mr. Kanavi. Frank, thank you so much, Mitro Plus Labs, for what you're doing to educate young people and other Ugandans and people around Africa on how to invest, on how to use their money wisely. Your last words as we depart.
Okay, before we depart, I'll tell the young Ugandans and actually Africa in general, that Mitro Plus Lab is not only teaching people to trade or to deal with the financial markets, but right now we are soon starting courses for those who are interested in programming and software engineering. So still this is going to be free, and so soon you can go to our website www.mitropluslabs.com and try to check on us. Still on Twitter, you can check mitroplus.com Twitter handle. We have a lot for you, for Ugandans and for the young generation in Africa. We are here to empower you with job opportunities, because here you can employ yourself minus you going to other countries to make money there. Money is always with your phone, with your PC. You can make it seated anywhere you are.
Wow. There you have it, ladies and gentlemen. That's it from us today. Thank you so much for being a part of us from the beginning. So in the end, I think trading is not gambling. Trading is a lot more about knowledge and research and making wise and informed decisions. Make sure you have the knowledge and the expertise before going ahead to invest, because this is not a gambling or any other game that you can play about, but it is a game of numbers and a game of information. My name is Anthony. Once again, thank you so much. I've been with Alltech East Africa all the way. Simply dial *292# to experience Alltech East Africa on a whole new different level. See you tomorrow. Have a very wonderful day. Bye for now.